Good evening, everyone, or good afternoon, good morning. Could be good morning in Asia and Australia. So it's Sunday, April 25th, 2021. We're going to look at the Fed a little bit today, the origins of the Fed, of the U.S. Central Bank. Of course, the Fed is not the first central bank the U.S. has had. Yes, Billy is here. Billy's getting a haircut on Tuesday. His groomer's coming over. It's a mobile groomer. So, yeah. What is in Fort Knox? Well, supposedly all the gold that FDR and the Fed stole from the American public in 1933. So, yes. I think there's quite a few books that are interesting to read about the Fed. You probably saw in the thumbnail that there's a book there. I put some books on the thumbnail for this live stream. There's one that was actually recommended by Jim Sinclair. Jim Sinclair was born a Seligman. The Seligmans were one of the biggest bankers, actually. They were German Jewish. They came to the US in the 1830s, and I think they helped finance the Union during the Civil War. I think even President Lincoln's wife, when she became a widow, of course, her banking was done by the Seligmans. And one thing I like to say before I start talking about the Fed, the origins of the Fed, the people behind it, I like to say that this is not about religion, ethnic groups, race, or anything like that for me. Even though a lot of people make a big deal out of it, I think there's all kinds of people, all kinds of creeds, race, religions involved in banking. Yes, there's a lot more Jewish people involved in banking, and I think the only reason why is because Jews have been stopped from owning property for hundreds of years, from being farmers and doing other things. So they reverted to something that they could do, that they weren't. How can I say? Not allowed to do, and that's why I think there are more Jewish bankers than there, per capita. I would say is a big number. You look at the Fed chairman and chairwomen in the last 30, 40 years. Um, a lot of them were Jewish, but anyway, Jim Sinclair. I've been following his JS mindset since 2002 for almost 20 years. And he told us years ago that we should read this book, Our Crowd. And it is about the German Jewish families of New York, the banking families. And it's very interesting because they all intermarried. They they wouldn't allow anyone from outside their crowd to join in. And there's an interesting passage here that I only noticed about a year ago. And I read this book over 10 years ago, and I didn't put two and two together about some of the forces and some of the people behind the Federal Reserve. And it's on page 40. And it's about August Belmont. He was a German guy who emigrated as well. The book, they talk about how they think he was an illegitimate Rothschild, August Belmont. He went to New York in 1837. And this is what they say. The author, Stephen Birmingham, says on page 40, in the Panic of 1837, and Belmont arrived right for the panic. So that's a little bit suspicious as well. Belmont was able to perform a service. And by the way, August Belmont was sent to the US to be an agent for the Rothschilds because he was actually employed by the Rothschilds. So able to perform a service which he would repeat in subsequent panics, and which helped make him a friend to bankers and to the United States government. By negotiating large loans from the Rothschilds, he was able to shore up the United States debtor bankers. In other words, he was able to, thanks to the hugeness of the Rothschild reservoir of capital, to start out in America operating his own Federal Reserve System. So his own Federal Reserve System. I thought that was really telling. This book was written in the 60s. And so why do they have to get eventually about 80 years later a central bank? Well, because if you know about the history a little bit of the panics, of the crashes, there was I think the crash of 1907. It was always J.P. Morgan who had to get the bankers together on Wall Street and bail everyone out. And I think there probably was a lot of Rothschild money behind that from London. I think the city of London and Wall Street have been joined at the hip. So I think the bankers thought to themselves after this '07 crisis, and there's the old saying, never let a crisis go to waste. So they used that crisis to tell Congress, look, we need reform. And by reform, they meant we need another central bank, because you did have a central bank until 1837, I think, or 36, when Andrew Jackson didn't renew the charter. So what's the Federal Reserve System done? Well, it's basically given the bankers a put. It's a lender of last resort on the back of the American public, of the taxpayer. Of course, the Federal Reserve did not start out as how can I say, a buyer of government bonds and assets. They were there initially. The way they got on board, the way they started it was to say that not only say, but they acted as a facilitator of discount loans. And what are discount loans? Well, they're loans that usually last a month or 3 months, and they are loans on real goods, on real trade. So they helped fill the gap of liquidity, and that was a good thing. But then they abused it. The system was abused with World War I, another crisis, World War II. That led to the growth of the Fed's balance sheet. They started buying government bonds, and that's why we are in this situation today. I'm going to show you here the growth of the Fed's balance sheets in terms of government bonds, and you see what I mean here. How let's see, the war led to the growth of the balance sheet. I'm going to share the document here. Let's have a look. Share screen. So there you go. You can see Federal Reserve holdings. They held very little government securities, as you can see there. It was just during World War I that they started picking up, as you can see. This is from Alhambra Investments. So the Federal Reserve was supposed to be adding liquidity to real businesses, but then they started buying government debt. And now, I mean, the whole balance sheet is government debt. There is mortgage-backed securities, which is they're not supposed to buy it, the original Federal Reserve Act. So a lot has changed. I'm going to show you another interesting chart here of the Federal Reserve. Let's have a look here. Oh yeah, this is the one that's even clearer. And this is from Mermercant Capital, which is Dan Oliver. I've interviewed Dan Oliver. As you can see here, the Fed started out treasury bonds, they held almost very little, like less than 10%. And you see that, I guess it picked up with the war, and then World War II again, and now it's gone off to the races. They've added on mortgage-backed securities, but it wasn't supposed to be. Their balance sheet was supposed to be very liquid loans or discount bills. That's the better term, discount bills. Tom, thank you for your super chat. interesting subject today, Mary. Privileged and honored to be here. Oh, you're welcome. I have spoken a lot about the Federal Reserve through the years, the last 5.5 years that I've been doing my videos. But sometimes it's good to get back to to the central bank. So yes, I'm going to get to this book, but I think it's interesting that we look at another book. And this book I read this book like many years ago, just when I was starting out in the business, or even maybe before when I was thinking about going into finance. And I think I bought this book in Geneva when I was living in Switzerland, The House of Morgan by Ron Chernow. So the secret history of money and power. So the thing I learned the most about this book, and I read it many years ago, but the thing that stuck with me is that I didn't realize that JP Morgan was actually a London bank originally. You think JP Morgan is a New York bank, but it's not. And how did it start out? Well, there was an American banker in the 1800s, let's say just before the mid 1800s, around that time. His name was George Peabody. I think he was from Baltimore, did a lot of business in London. Some people think that he was connected a lot to the Rothschilds, because at the time there was a lot of anti-Semitism in the city of London. So the Rothschilds had to put a lot of their business through other bankers. And some people suspect that Peabody was a front or an agent of the Rothschilds, but he supposedly didn't have any immediate family, like sons or daughters to take over, or son-in-laws to take over the business. So he hired Junius Morgan, who was JP Morgan's father, to come to London and work for him. And Junius Morgan became a partner. And when George Peabody passed on, Junius Morgan took over Peabody, and it became Junius Morgan and Company. And that's where JP Morgan originated from. And Junius Morgan basically was based in London. And JP Morgan actually started its JP Morgan Bank started in London. Eventually, they went over to New York, but they've always been based in London. A lot of people think as well that it's connected to the Rothschilds, and it could be because Peabody was connected. And there's a story about JP Morgan. I think when he died in 1913, everyone thought he was very, very wealthy, but he actually didn't have a very big estate. So it makes you wonder. So I think the House of Morgan connection is very important. House of Morgan, City of London, Bank of England. And I think there's probably a lot of influence from the City of London on Morgan and other bankers in the US to kickstart a central bank. And you have to remember that in the early 1900s, London was still the center of finance. And even today, foreign exchange is a big part, is in London. So I think we need to keep that in mind, that, yeah, the Federal Reserve is actually, I would say, an international institution. It's a Wall Street, City of London mix. So we've been through a couple of books. We've been through Our Crowd and the House of Morgan. So I'm just going to have a sip of my water. Martin Sanders says George Washington would be backing Amazon today. Washington would never have allowed this to actually. One thing about George Washington, I went to the Bank of England Museum a couple of years ago. There is a museum at the Bank of England. And I was looking, it was a very interesting museum. They even have a 400-ounce bar. It's in a plastic box. You can put your hand in the box and touch that gold bar. But I saw a letter on a picture in the museum, and it was addressed to George Washington. And why George Washington? Well, George Washington's widow, not his widow, but he married a widow, Martha, I think, Custis, and her husband was a shareholder of the Bank of England. And so how it worked back then, her husband died, and then George Washington married her, so he took over everything. That's how it worked back then. So George Washington he became a shareholder of the Bank of England. This letter is a letter announcing a payment of dividends to George Washington. So I thought that was very interesting. So the most important founding father in U.S. history was a shareholder of the Bank of England. I don't know if he was paid the dividends during the Revolutionary War, if they stopped payment, but I thought that was quite interesting. I think it's very hard. I've seen some comments about, I think even before I started, there are people saying that Donald Trump is going to get rid of the Federal Reserve. Well, he didn't do anything while he was president, so I'm not sure how he's going to do it now. I know there's a lot of people out there who think he's going to come back. Well, he could run again, of course, in 2024. But I think it depends. The public need to learn about the Federal Reserve and how money works and demand political change, because a president on his own can't do it, because you need support from the whole of Congress. And it's unfortunate because when the Fed was created, there was a lot of opposition to it. They had to pass the Federal Reserve Act. They voted upon it on December 23rd, when most of the senators had gone for Christmas. Back then, you couldn't fly. It took a longer time to get home. Yeah, so they got it through. They sneaked it through. And I think a lot of people, the majority of people, didn't really know what they're voting for. There were a few congressmen that did, and I'm going to come to that in a second. Chris Conman, thank you for your super chat. Mary, can you expound on your conversation with Rafi last week when you were discussing with him that the markets will force central banks back on the gold standard? Is it probable? Thanks. Well, that's actually, I was talking to him about a comment that I heard Dan Oliver make, how markets do that. And they did, the last time they did that was back in 1980, when the price of gold, the market drove the price of gold to almost $900 an ounce. And that actually backed the balance sheet of the Federal Reserve 135%. So with that price, the balance sheet of the Federal Reserve became back 135% by gold. That's if you take the U.S. gold holdings. So that's what we meant. And why do I think the market is going to do it? Well, because there is no political will to put the U.S. currency on a gold standard. So the market will do it. So that's the way, and I still think it's going to happen as well through the market. Yes, I know the market is controlled by the bankers, but there will come a time where they will have to let the market readjust. So what else did I want to show you here? Where is it? Oh, yeah. This is Charles Lindbergh Sr. He was the father of Charles Lindbergh, the Aviator, the Spirit of St. Louis guy who flew from New York to Paris for the first time. So his father was a congressman from Minnesota. He was originally from Sweden. He emigrated to the U.S. This is what he said about the Federal Reserve. He was very anti-central banking. He said, this act, Federal Reserve Act, December 23rd, 1913, establishes the most gigantic trust on earth. You see, he understood what was going to happen. And how right was he? I mean, 108 years later, it is the most gigantic trust on earth because it owns everything almost. It's printing money and buying all these assets, right? And back then, it wasn't. It was just supposed to help the liquidity in the discount market. But it's just grown and grown and grown. When the president signs this bill, the invisible government by the monetary power will be legalized. The people may not know it immediately. So there you go. But the day of reckoning is only a few years removed. Yeah, it was a lot more. I think he was right because you had World War One. They started buying government paper, and then World War Two. That was an excuse as well. The trusts will soon realize that they have gone too far, even for their own good. The people must make a declaration of independence to relieve themselves from the monetary power. This they will be able to do by taking control of Congress. That's what I said. It's not the president that's going to do it. It's Congress. Wall Streeters could not cheat us if your senators and representatives did not make a humbug of Congress. The greatest crime of Congress is its currency system. The worst legislative crime of the ages is perpetrated by this banking bill. The caucus and the party bosses have again operated and prevented the people from getting the benefit of their own government. So there you go. I thought that was a really great quote by Charles Lindbergh Sr. And yes, I'm in the UK. I'm originally from Brazil. Why do I care so much about the Federal Reserve? Well, because really it is a central bank for the world. And if we can get rid of central banking, we need to get rid of the Fed. And I guess it's up to Americans to do that, to elect people that want to get rid of the Fed. But there are other central banks around that are very important. There's the BIS, of course, that's important. Have to get rid of that as well. Norman Burton, thank you for your super chat. There is a book and a documentary on YouTube called The Princes of the Yen. It lays out how the central bankers internationally blow bubbles and crash the economy. Yeah, I've seen that YouTube channel video several times. I think it's by a German economist. I forgot his name now. Maybe you could remind me. It probably come to my mind. I think he's UK based. It's a very interesting YouTube video. I recommend it as well. So this is a very popular book about the Fed, The Creature from Jekyll Island. A Second Look at the Federal Reserve by G. Edward Griffin. I've had this book for many years. Yeah, when did I buy this? I think around 2004 or 5. This edition was, when was this published? Well, I don't remember exactly. Oh, here we go. Yeah, this is 2003. So I've had this for about 18 years. And I'll just go through a section here where he talks about who were the men who went to Jekyll Island. And what is Jekyll Island? Well, that's an island off the coast of Georgia. And that's where the major bankers on Wall Street went. They went there by train on a private train car. They left, I think, Hoboken, New Jersey, and they only used their they used code names. They couldn't call each other by their surnames because they didn't want the journalists to know they were going there to basically design the blueprint for the Federal Reserve. Ali Tut, thank you for your super chat. What is the difference between a bank's liquidity and its capital? The way to, well, just look at yourself. Your capital, let's say, is the house you own, your home. let's say the equity is the value of your house minus the mortgage, and liquidity is the money you have in the bank every month. If you go into a debit with the bank, you you have to ask for an overdraft. It means your liquidity is bad, but it doesn't mean to say you're bankrupt because you still got capital. So it's the same thing for a bank, their liquidity. Just because of their daily and monthly operation, their liquidity might go get in trouble. And also businesses, and that's what the Fed was supposed to help. But let's go to page 5 here, and this tells us who are really behind, who the people behind the Federal Reserve. Um, a lot of people discredit this book, of course. They say it's a conspiracy, but it's all based on facts and documents. So let's go through this. And so as the passengers drifted off to sleep to the rhythmic clicking of steel wheels against rail, little did they dream that riding in the car at the end of their train were 7 men who represented an estimated 1/4 of the total wealth of the entire world. So basically, they were the richest people. Probably the richest man in the world, representing 1/4. There was the roster of the This was the roster of the Aldrich car. And Nelson, I think his name was Nelson Aldrich. He was a senator. And I think he is also the son-in-law of Rockefeller, J.D. Rockefeller Jr. So they weren't Jewish. They're Baptist. And why do I say that? Well, because everyone always says, oh, it's the Jews that control the central banks. Well, they do. They control to some extent, but it's not only them, right? So Nelson Aldrich, Republican whip in the Senate, chairman of the National Monetary Commission, business associate of JP Morgan, father-in-law of John D. Rockefeller Jr. So there you go. Abraham Pyatt Andrew, Assistant Secretary of the U.S. Treasury. So the government was involved in this, the U.S. Treasury. And I think that goes back to J.P. Morgan, the House of Morgan. They bailed out the U.S. Treasury. I think it was in 1893 or 96. U.S. government had liquidity problems, so they had to bail them out with an international loan. I would say the Rothschilds probably were involved, and the House of Morgan in London helped that. So basically, the U.S. Treasury became really part of the banking system. The bankers run the Treasury, and I think they still do. So who's the third guy? So far, we don't have any Jews. We've got Pyatt Andrew and an Aldrich. Next one was Frank Vanderlip, president of the National City Bank of New York. Well, that's Citibank, the most powerful of the banks at the time, representing William Rockefeller and the international investment banking house of Kuhn, Loeb and Company. Well, Kuhn, Loeb, they are part of this crowd. So yes, they are Jewish, Kuhn, Loeb. Henry P. Davison, senior partner of JP Morgan. So JP Morgan seems to be well represented. The Rockefellers are well represented. Charles Norton, president of JP Morgan's First National Bank of New York. Benjamin Strong, head of JP Morgan's Bankers Trust. And then the seventh one is very interesting. It's Paul M. Warburg. He was a German banker. He's part of our crowd. He married into the, I think one of the Seligmans married a Warburg. They married Rothschilds as well. They married other families as well, Schiffs, Kuhn Loebs, all of them. So Yeah, Paul Warburg, a partner in Kuhn Loeb and Company, representative of the Rothschild banking dynasty in England and France, and brother to Max Warburg, who was head of the Warburg Banking Consortium in Germany and the Netherlands. So that was it. Those were the people involved in the Jekyll Island meeting. So it was a big mix of bankers, and one of the wealthiest people, they control 25% of the wealth in the world. Schiff, as in Peter, yes, it's the same name, but I don't think Peter Schiff is related. This is a common name, Schiff. Peter Schiff is not related to the Schiff, Warburg Schiff banking family. And so I saw a tweet from someone, I think it was from Ben Rickert. It's a guy who uses that as an alias on Twitter. He's quite popular, and he was talking about the Fed, and he was asking people, who do you think controls the Fed? Well, the Fed is a hybrid. What does that, well, and what do I mean by that? Well, the 12 regional banks of the Federal Reserve, they're private, but the Federal Reserve Board in Washington, D.C. is a government agency. So it's a hybrid. But if you look at the Fed's balance sheet, I'm going to share this with you, and it's public information. So here we go. Federal Reserve factors affecting reserve balances. Here's the website, federalreserve.gov. It's a government website, and here you've got assets, total factors. This is all the assets under the balance sheet, 7,850, 272 billion, so 7.8 trillion. But if you scroll down through this, and I know I never used to do this until a few years ago, so this is what is really interesting here, and I'm gonna zoom in a little bit so you can see. So total assets of the Federal Reserve System, there you go, is 7.82, not 7.85. But if you look at it, these assets are not at the Federal Reserve Board. They're owned by each individual Federal Reserve Bank, and they're private banks. So who owns these private banks? Well, it's the biggest banks or a lot of the banks in each individual district. So in New York, for example, it would be JP Morgan, it would be Citibank, it would be Chase Manhattan Bank, which doesn't exist anymore, of course, was bought out by JP Morgan. It would have been Bankers Trust that we saw in the Creature from Jekyll Island. They were bought out as well, I think, maybe by Deutsche Bank. But so you see that the New York Fed has all the power. Their president is always on the Federal Reserve or in the Open Market Committee. It's the only regional bank that has this status. And you can see they own about 56% of all the assets. So I would say the big New York banks, which are probably controlled also, we'd have to go and see who are the biggest shareholders of JP Morgan. It's probably very difficult to get, we'll probably not know exactly who's behind them. These people hide behind trusts and companies, offshore companies. But I would say there's probably a lot of these a lot of international families involved in that. So as you can see here, the New York Fed dwarfs every other regional bank. I think San Francisco comes comes in second, but they don't even have $1 trillion in assets. So really New York, the big New York banks and Wall Street really control the Federal Reserve. So yeah, do you wonder why the big banks always get bailed out? Well, that's why. So let's see here. We're gonna get to the part where you guys can ask questions, because I think I've gone through this quite a bit, but I'm just gonna show you another book, and I think this is an even better book than The Creature from Jekyll Island, because Eustace Mullins started looking into the Federal Reserve way before G. Edward Griffin, and that's not taking credit away from G. Edward Griffin, but Eustace Mullins. This is a great book if you can find it, The Secrets of the Federal Reserve by Eustace Mullins. And he was encouraged by Ezra Pound to look into the Federal Reserve. Some of you might have heard of who Ezra Pound was. He was an American poet, very controversial guy, but he was the guy who encouraged Eustace Mullins to look into the Fed. So I recommend that too. So I'll look at some of your questions. Let's see how many people we've got on. Okay, not as many as usual. Power, okay. Are you a based boomer? I'm not sure what that means. A based boomer, so you'd have to be more specific. I don't understand your language. Bitcoin is the great conspiracy. Powerful Kundalini said, thank you very much for all the information. Oh, you're welcome. Yes, and Rome is the mystery Babylon of the Bible. The Jesuits rule from the shadows. I kind of agree with that. I didn't plan to show you this book today, but I bought this a couple of months ago. I've started reading it. God's Bankers, A History of Money and Power at the Vatican by Gerald Posner. This is a really good book. I just started reading it. I'm in page 100 right now. It's going through the history. But yeah, the Vatican is involved. The Vatican has been around longer than any legal entity. So the Vatican is kind of like a corporation, the original corporation. I've spoken about the fact that the Vatican helped the New York Fed in the 70s when Paul Volcker was president of the New York Fed. He wasn't the chairman of the Fed. It was before, when he was president of the New York Fed. The Vatican Bank allowed the New York Fed to lease out the gold that the New York Fed held for the Vatican. And why would they do that? Well, because the New York Fed wanted to sell the gold into the market to drive the price lower. So the Vatican has even helped the central banks manipulate the price of gold. So yes, very powerful entities involved. But as I say, the only solution, in my opinion, is for the general public to learn about money, how it works. We need to know, or else they're going to keep extracting wealth from the public. And how do they do that? Well, they make money complicated. They don't teach children in school about how money works. I didn't learn what I know in school. I learned it many years after I finished university. So, and that's the way they want to keep it. So they can keep, they want to control the money, right? That's the old saying, give me control of the money supply. I don't care who makes the laws. And the other thing, yeah, can you imagine if you could just create money out of thin air, how wealthy and powerful you would be? Well, and that's what these people do. And people need to wake up. The only way to fight them is to know the mechanism, the fiat currency, the central banking, because basically central banking, all it does, it lumbers taxpayers. So what does it do? It privatizes profits for the bankers, and when the bankers lose, it makes the losses public, right? So the bankers never wear the losses; they always gain. So, is it any wonder now that the 1%, the big corporations are so wealthy and powerful. Is it any wonder there's so much wealth inequality? And personally, I think it comes from this system. And it's kind of sickening to realize that the church is behind this as well. And I don't think it's only the Catholic Church, because there are other churches like the Church of England that have. Church of England is one of the biggest investors in this country here. They have investments all over the world. So I think any kind of organized authority, I don't trust them that much, and they're all in it together. So, Mark Volker, thank you for your super chat, and you're welcome. He says, "Thanks, Mario." Thumbs up for Billy. Yeah, Billy's asleep as usual. Anthony One, thank you for your super chat. Can you please get Billy a treat for me? Okay, I will. I will get him. He likes dentist sticks or any kind of treat, really, he likes. What will happen to Delarue? Delarue, basically, it's a company that does the printing of banknotes. It's a private company. I'm not sure. They were in the news a few years ago. I think there's still business for them to do. I think we're not going to go cashless that quickly in the UK or in other countries. Excuse me. I think there are countries like Switzerland and Germany where people still use a lot of cash, but they'll just have to maybe adapt, do something else. I guess, basically they're involved in publishing. Delarue. Pocket Lawyer, thank you for your super chat. Says you're doing a great job. Keep it up. Oh, thank you for the feedback and encouragement. It's always good to know because yeah, I want to. The reason why I make these videos is to try to get the public informed about this, because I think it's the most important topic. Not because I love money, the love of money, right? That's not. It's because money is half of all really commercial transactions you will ever make. There's all, especially in the, how can I say, modern industrial specialized economy. Of course, if we lived hundreds of years ago or in more primitive society and we were all sub farmers or hunter gatherers, we wouldn't need money. But the only reason human society has evolved is because we found how to use money. It's a human invention, and I think it's been spoiled. Unfortunately, it's been abused, because money should be like the most marketable commodity. It should be something that you give up. Uh, you give up your efforts and your products. You should give up for something valuable, right? And right now we're not, and we've given the power to these monopolies, to these very few people, to create the money. But we humans create money. We create money through mining, through using whatever we want as money. We can't just allow government to basically give a rubber stamp to a few men and women at central banks and at banks to create money. It doesn't make sense. And to make money a debt instrument as well is another horrible thing, in my opinion. Eric Hoffner, uh, Mario, talk about the current UK economy. Well, not surprisingly, things are picking up because they're reopening the economy. But I think a lot of the statistics are misleading. We're told that unemployment rate is below 5%. We're told that there's no inflation. And I think that's very misguided. When the furlough scheme ends, in October, and it was supposed to end October last year. It's going to cost hundreds of billions, well, billions of pounds. Unemployment is going to go through the roof. They probably expect um, people to have gone back to work. So yeah, it won't go through the roof as much as if if the furlough scheme ended now. Uh, but compared to Europe, I would say uh, the UK economy is more flexible. There's less rules and regulations. That is a good thing. But the other problem with the economy and people don't look at is all the debt, the deficit, the huge deficit the government is running. We saw some numbers last week. It's over 300 billion budget deficit. That's like 15% of GDP. That's not sustainable. But yeah, the other thing for the UK economy that we need to consider is that it's dependent a lot on housing. We have a real estate bubble, and also dependent on finance. And I think government is too big still as well in the UK. But all in all, picture isn't great. But they're going to try, politicians, economists, the central bankers always try to play things up. But I think there is something wrong when the central bank has to keep interest rates almost at zero. If we had a sound free market capitalist economy, interest rates would be a lot higher, 5-6%. So not out of the woods yet, but not the end of the world for the economy. But I think also the crisis we've had the last 12 months, uh, it's going to make create a lot of uncertainty, and that's not going to help, especially in tourism. Yeah, so there you go. Chris Conman, can you explain what the military industrial complex is? Does it have influence over the precious metals market? Okay, that term is related to President Eisenhower's farewell speech, where he warned against the military industrial complex. I guess you could call it now the military uh, industrial information complex, because you got the big tech companies. They are companies that do huge amounts of business with the government, and they control the government, the military industrial complex, the big military contractors, the big industrial, or how can I say, technology contractors nowadays, like Amazon. So they control the government, they're in charge. And President Eisenhower warned against that. But the only way we can take away the power from these complexes, be it military, be it industrial, or technology, is to make government smaller. Because if we make government too important to the economy, yes, they're going to have to contract companies, private companies. And these private companies are going to become very powerful, because uh, there's usually some kind of corruption when government is involved, and when a company becomes too big, they can pay off the politicians a lot more than, let's say, a mom and pop small company can. So they get involved, and that's the problem. And I would say the nowadays it would be the financial technology, banking complex. Military is still involved, of course, huge military budget. Not joking. How was the Silver Vaults? Is it a walk-in? Currently reading The Creature from Jekyll Island. Oh yeah, the Silver Vaults was nice. Was interesting. Yeah, there is. You go in. Um, Unfortunately, you have to, yeah, you had to wear a mask. And they asked my wife to show her handbag. They just had a quick look. There is security, but yeah, you walk in, you go down a couple of steps, the vaults. There's loads of silver there, of course. Uh, they don't really sell bullion or coins. It's more like silverware, decorative silver, all kinds of silver artifacts, and it's really nice. I bought a couple of things. I'll show you guys from the silver vaults, and I would say a lot of it is very pricey. Couldn't find too many things that I really wanted to spend my money on, but I found a couple of things that I like. Um, they are called sovereign cases. Back in before World War One, when people carried gold coins around as money and currency, you had these. So there you go. That's a sterling silver sovereign case. So you put the sovereign in there, and a lot of times you used to hang it on the chain and use it. So I bought that at the silver vaults. I thought that was really nice. And I found another one of these sovereign things, but it wasn't, this is from 1910, I think. So it's quite old. But then I went into another shop and they had one of these. This is 2 years old, but it's silver and it looks like a bullet, as you can see. And this allows you to put your sovereigns in there too. So that's what I bought at the silver vaults. But there's so many shops there, so much to see. Very interesting. I recommend it if you're in London. It's in Chancery Lane. Well, nowadays you can find anything. You just Google the London Silver Vaults. Yeah, I have a few of these sovereign silver cases. This was really nice, and it looks in very good condition as well, as you can see. I think, oh, actually, this one is for a half sovereign, and that's for a full sovereign. You can see it's a different size. Uh, Joe Cletus Hazel Screech, perfect for passing airport security. Well, probably not. Probably not this, but I have gone through airport security with coins, just normal coins, copper nickel coins that we use. And I put 3 or 4 sovereigns with the coins. I traveled to Italy with the sovereigns and I put it through security, and they don't, like a small gold sovereign, a quarter ounce almost, they don't even know it's gold. So actually, yeah, you can take that like this without the coins in it. You just put the coins in your pocket and you take it. So not a problem. A says majority of the population has no idea what is happening regarding current debt situation. I work in service industry and people are clueless. I agree with you. And, the other thing I've noticed in the last month, because we've been under lockdown and I talk to you guys, my channel, I watch other channels about the same kind of subjects, and we all know what's going on, right? And you think that when you, and then you tend to think, oh, everyone does know. But having been going to play golf a lot more now that I can, you know, and it's a fairly big golf club that I belong to. And yeah, I can't think of anyone who knows what we're talking about. Very few people do. So I agree with you. And I think a lot of people are going to be very shocked. And I think they're already getting shocked because you see the cost of things going up. And a lot of people don't understand it. They don't understand inflation. And yeah, and they will never understand it, unfortunately, because You're not supposed to understand it, because if you understood it, how the bankers and government inflate the system, you would protect yourself, and they don't want that, unfortunately. They always blame greedy business people for inflation because they raise prices, but that's so misguided. And to think that CPI is inflation as well. You see a lot of headlines here in the UK. Oh, prices of flights to Spain uh, have gone up, and that's pushed inflation higher. No, it's a consequence of the inflation. It's not the price of flights to Spain that created inflation. It's the government and the Bank of England that do it. Lily Robin, do a show in your local coin shop. It would be great to see one across the pond. I've spoken about the coin shop. There's not too many coin shops in the UK, but there's still one near me, and I've known in Bromley. Peter Morris Coins and Metals. He's a traditional coin shop. He Yes, he's not really a bullion dealer. You can't call him and always sell to him. Well, you can sell to him, but he'll have to find a buyer. There's not many of them involved. We got someone here. Okay, let's get rid of him. I said that, you know, all religions and ethnic groups are involved in what you're saying there, Freemason. So I'm going to remove you. Okay, there you go. Block this guy. Hide him for now. Okay. Yeah, Henry Hazlitt is very good. Yes, he's like a Austrian School of Economics. Frogsy says the Fed is not the true power. Maybe not, but it's where the power, whoever's behind it, it's the instrument of power, I would say, the Federal Reserve, because it controls money and credit. And without money and credit, very little can be done in our modern economy. So we got 5 minutes to go. Let's see if I have a few other things here that I wanted to share. Let's see. What else? Oh, yeah. A little bit about silver, because I spoke about, I think, a couple of days ago, was it, about the situation with May Silver on Comex, that you see, I think it's I think next week on Thursday is the last day for it's the first notice day. I think it's is it April 30th, that you can start telling people that you want to get the May contract delivered, the silver delivered. As you can see there, the open interest is still at 56,000 contracts, which is over 250 million. And they've only got 4 trading days to get rid of this 56,000. You can see that it's dropping by about 10,000 a day. So let's say it keeps dropping by 6,000. There's still going to be like over 150 million ounces maybe standing for delivery. So this could be very important for the silver market. We need to keep an eye on this number. If by Thursday next week, this number is still, let's say, 30,000, that could be a problem for COMEX. 30,000 open interest would mean that someone's standing, for delivery of 150 million ounces of silver. There is speculation that that could be Eric Sprott. Who knows? We'll have to see. So yeah, we got about 3 minutes, so I'll take a few more questions before we conclude tonight's session. Where are they going to find all that silver? Well, that's a good question, Pablo. They might try to tell the people who are standing for delivery that they will be able to that they'll have to settle it with cash. That could be a problem. They might be getting the silver from mints like the Perth Mint, because the Perth Mint doesn't seem to be wanting to sell to domestic investors. They might have to clear the ETFs of their silver, but it could be a problem. We'll have to wait and see. Pentur Airless Lorient says, what's your time frame for silver to explode? I mean, May could be where we actually break that 30 level in the paper price. I think the price has already exploded, the retail and slightly more, the retail market, the physical market for gold coins and bars has already gone up. But yeah, I think we could be very close to breaking that 30 level. And when it does, it could be quite explosive. Over here, I would have thought you were a celebrity when you get out on the golf course needing security. No, very, no, people. That's the thing. I try to. I do tell people I do stuff on YouTube, but I don't know. I just try to keep it low key. I don't mind if people don't know what I do. I'd rather keep it under the radar, so to speak. And that's not a problem because, I have a lot of viewers outside, my where I live, of course. That's the great thing about YouTube. SW says silver should be $50 an ounce. I agree, but I think once it breaks 30, I think it will go to 50 very quickly. There will be very little resistance above 30. Okay, everyone. Again, thanks for showing up. Thanks for all the questions. Thanks for the super chats. And and thank you for the interest. And I'll talk to you tomorrow and the whole of next week. So, oh yeah, and if you're new to the channel, and this is the first time you watch my channel or my live stream, think about subscribing. I make a video, well, at least one video every day. Sometimes I make two. So there you go.